Dr.R, Associate Professor, Department of Economics, School of Business and Management, Respectively, Dean to the University. Welcome to this session, definition of funds flow statement. In this video, we will explore what are funds, definition of funds flow statement, objectives of funds flow statement, importance of funds flow statement, limitations of funds flow statement, and the preparation of funds flow statement. Before going into funds flow statement, we will learn what is called as a fund. Fund has different meaning based on context. All the financial resources of the company is called as funds. There is a difference between fund and cash. Fund refers to the amount of cash the business carries. Cash refers to the amount of liquid cash readily available. Most acceptable meaning of fund is working capital. Any transaction that results in an increase or decrease in working capital is called as flow of funds. The transaction that results in changes of working capital is called as flow of funds. Working capital can be calculated by using the formula current assets minus current liabilities. If the transaction results in increase of fund, it is called as inflow of fund or sources of fund. If the transaction results in decrease of fund, it is called as outflow of fund or application of fund. The definition of the funds flow statement. Third, defines a statement of sources and application of fund is a technical device designed to analyze the changes in the financial condition of a business enterprise between two dates. A financial document that analyzes a company's balance sheet of 2 time periods. It validates the movement of funds from the previous financial year to the current year. It highlights the underlying financial movements. It reflects the changes in financial position or working capital position in 2 different ways. We will see the objectives of funds flow statement. To understand the working capital position and anticipate the future position of the firm, and to know the reasons for changes in working capital during the period, to assess the financial condition of the firm, and to reveal the most important changes those have taken place during the particular period. And we learn the importance of funds flow statement. It is useful to shareholders. It provides information regarding the availability of funds in the business. It enables to know the ability of the company to pay dividends, and it is useful to creditors and debenture holders. It helps to understand whether the money borrowed is utilized or not. It enables to judge the capacity of the company to repay the loan or debentures. Useful to financial institutions. Evaluate the capacity of the company to repay the loan or debentures. Ability to fulfill future credit repayment capacity. Useful to the management. Planning temporary investment of funds. Evaluating proper utilization of funds. Formulating sound dividend policy. And to estimate future working capital requirements. And we'll see the limitations of funds flow statement. It shows what happened in the past, hence it is historical in nature. It is only a rearrangement of data given in financial statement, hence it is not original. It cannot reveal continuous changes. It does not reveal the cash position of a firm. That comes with preparation of funds flow statement. So in preparation of funds flow statement, there are 3 steps. The first step is to prepare the schedule of changes in working capital, then adjusted profit and loss account, followed by statement of sources and application of funds. We'll see the schedule of changes in working capital. That is the first step in preparation of funds flow statement. It is prepared to calculate the change in the working capital between the balance sheet. It estimates the current assets and current liabilities mentioned in the balance sheet. And this is the format of schedule of changes in working capital. So first we write the current assets for the year 1 and year 2. Year 1 will be the previous year, year 2 will be the current year. So we find the difference between the previous year and the current year. And we'll record if the working capital is increased, we'll record an increase in working capital. And if it is decreased, we'll record a decrease in working capital. Then we'll total it, and after that will be writing the current liabilities. In the current liability, we have creditors, bills payable, etc. And we'll find out whether increase in working capital or decrease in working capital. Then we will use the formula current assets minus current liabilities and find out the working capital. And finally, we write whether there is an increase or decrease in the working capital. The next step is to find out the funds from operation. So it can be prepared by preparing the adjusted profit and loss account, and it is prepared to identify the funds generated by the business and important internal sources of funds, 2 methods available to compute the fund, method of preparation of adjusted P&L account, and this is the format of adjusted P&L account. On the debit side will be posting non-fund or non-operating expenses, and if you have any appropriations to any reserves, and on the credit side will be into net profit drawdown, opening balance, and non-fund or non-operating incomes, and any appropriations. And when you get the balance on the credit side, it is funds from operation. When you get the balance on the debit side, maybe it is funds lost in operations. The third step in potential funds flow schedule is statement of sources and application of funds. It shows where the funds came from and how the funds were utilized. It contains 2 sections, sources of funds and application of funds. This is the format of statement of sources and application. So on the left-hand side, you have sources, and on the right-hand side, you have applications. Under sources, you have issue of differentials, issue of equity shares, issue of debentures, sale of non-current assets. And if you have decrease in working capital, in step 1, that is schedule of changes in working capital. And on the application side, redemption of differentials, redemption of debentures, redemption of loans, structures of non-current assets, dividends paid, tax paid. And you have increase in working capital that is derived from the first step, like preparing schedule of changes in working capital. You may get decrease in working capital or increase in working capital. And if you have any loss from operations, you have to record it on application side. And if you have funds from operation, it has to be recorded on the sources. And the total of sources should be equal to the total of application. To summarize, functional statement shows limit of working capital. It helps stakeholders understand how funds were raised and where they were used, and it is a powerful tool for financial analysis and planning. Thank you.